Welcome back to Teshkid Effects for another price prediction update, and in this video I'll be giving you a price prediction update on Fantom, whose current price stands at the $0.02393 mark, and here on TradingView the market is down by 0.71%. And in this video I want to give you the short-term and the long-term scenarios that I expect to play out, basing my analysis on the Elliot structures, the Fibonacci's, and also the key areas of support and resistances. And allow me to kickstart the video here on the daily chart by giving you a brief of what has been happening here on the Fantom chart. So Fantom, from these low prices that we had been trading within, we saw a very nice impulsive movement to the upper side, taking us to an all-time high at around the $3.5 mark, in a movement that I'm terming as a higher Elliott wave count 1 to the upper side. So we can have that as a higher Elliott wave count 1. Then after seeing the all-time high, we had been seeing lower prices in this massive ABC corrective structure, which has now taken us back to around $0.16 mark in a movement that I'm terming as a higher Elliott wave count 2. And after seeing the low for that higher Elliott wave count 2, whatever we expect next is a bounce to the upper side in the formation of a higher Elliott wave count 3 before we see a wave 4, then continue pushing even higher in the formation of that wave 5 to the upper side, and giving you a measure from the all-time high. From the all-time high, Fantom is down more than 92%, and that means there are chances that we might have seen the low for this higher Elliott wave count 2 and also the bear market low, and there are chances that very soon we might see that reversal to the upper side in the formation of this wave 3, taking us to an all-time high over here in the next bull market, and sketching out a minimum target area to the upper side in the formation of this wave 3 using a trend-based Fibonacci, connecting it from the low of the first wave to the high of that wave 1, then dragging the Fibonacci's to the low of the second wave. That gives me a minimum target area to the upper side in the formation of that wave 3 at the Fib level 1.618, and that is at around the $5.7 mark, and that is the minimum that I would expect Fantom to do in the next bull market, and that is my long-term scenario that I'm expecting to play out here on the Fantom chart. And jumping to the 1-hour chart for further analysis and also give you the short-term scenarios that I expect to play out here on the Fantom chart. Here on the 1-hour chart, you can see this is where we made our low at around the $0.016 mark, and after seeing that low, we have been seeing a very nice bounce to the upper side in a movement that has been obeying the Elliott wave structures. And if I have my Elliott wave structure over here, we can have this as the first wave to the upper side, then this is my wave 2, then we saw the reformation of a wave 3 to the upper side, and right now I'm expecting a bit of a retracement over here in the formation of this fourth wave before we continue pushing even higher in the formation of that wave 5 to complete a higher Elliott wave count 1 to the upper side. And getting a little bit into the details of the formation of this Elliott wave structure that we have right here, we can sketch out a minimum target area to the upper side in the formation of this wave 3 using a trend-based Fibonacci, connecting it from the low of the first wave down there to the high of the wave 1, then dragging the Fibonacci's to the low of the second wave, and that gives me a minimum target area to the upper side at the Fib level 1.618, which is a target area that we have fully maximized and continued pushing even higher, making it to the Fib level 2.618, and that is where we made our high for that wave 3, and that means this is an extended wave 3 to the upper side. And after seeing that high, whatever we expect next is a bit of a retracement in the formation of a wave 4, which we can sketch out a minimum target area to the lower side using the Fibonacci's, connecting them from the low of the second wave to the high of that wave 2, and that gives me a minimum retracement area to the lower side in the formation of that wave 4 between the Fib level 0.5 and the Fib level 0.618, and you can mark that target area, which perfectly lies between the $0.22 mark and the $0.2 mark, and that is the minimum that I'm expecting this fourth wave to the lower side to do. And because the wave 4 is a corrective wave, we also expect to see an ABC corrective structure over here, so I'll be expecting an ABC corrective structure having the wave C fully maximizing the formation of that wave 4 to the lower side, and giving you a chart pattern that is in formation right here, which is also supporting that movement to the lower side to fully maximize the formation of this wave 4. Over here we have seen the formation of a triple top, and if I draw it out, we can have that as the first top, then we saw a bit of a retracement in the formation of the second top, another bounce in the formation of the second top, then the neckline, then another top, then we have seen a bit of a breakout to the lower side, and this is a chart pattern that normally breaks to the lower side, having the minimum target area of the breakout as the height between the tops and the neckline. So we can get that height, then place it below the neckline, and that gives me a minimum target area back to around the $0.2129 mark, which perfectly lies within this target area that I have drawn out over here. And that means in case we continue pushing lower, and that is seeing a breakout out of this chart pattern, there are chances of fully maximizing the formation of that wave 4 before we continue pushing higher in that wave 5 to the upper side. Also taking a look at what is happening here on the Fantom chart, you can see that we are trading below the 20-day MA here on the 1 hour chart, and that means the 20-day MA is acting as resistance, and we need to manage to break above it for us to continue pushing higher. But it's giving us a resistance, and that means we can see a bit of a pullback once we hit it, and then see a bit of a retracement to fully maximize the formation of that wave 4. And also taking a look at the indicators to see what movements will be supported here on the RSI. On the RSI, we are trading at around the 49 mark, meaning we have massive room for us to support movements to the upper side. Also, any movements to the lower side will still be supported. Also taking a look at the MACD, on the MACD we have printed a bearish cross, and that would mean lower prices, and lower prices in the formation of that wave 4 will be supported on the RSI and also on the MACD. So let's be patient and see how that plays out, and I'll keep you updated.